Good morning, I'm Brian Curtis. Here are the stories we're following today. Nvidia is selling a less capable version of its top graphics product for video gamers in China. This comes after the U.S. government tightened restrictions on what the company can market there. The version of the GTX 4090D chip is listed for sale on Nvidia's China website, but it has about 10% fewer processing cores than the 4090 that is sold in other countries. Nvidia's CEO Jensen Huang has said that the company will produce versions of its products for China that comply with U.S. export curbs. Well, half of the container ship fleet that regularly transits the Red Sea and Suez Canal is avoiding the route now because of the threat of attacks. We get the story from Bloomberg's Karen Moscow.
A tally compiled by Flexport shows almost 300 vessels with a combined capacity to carry 4.3 million containers have either changed course or plan to. That's about double the number from a week ago and equates to about 18% of global capacity. Flexport says the diverted journeys around Africa can take as much as 25% longer than using the Suez Canal shortcut between Asia and Europe. Those trips are more costly and may lead to higher prices for consumers on everything from sneakers to food to oil if the longer journeys persist. Karen Moscow, Bloomberg Radio.
One of the world's best-known department store chains is now shopping for a financial lifeline. The story from Bloomberg's Tom Busby.
Cambridge Properties, owner of the iconic Selfridge department store in London, may be in trouble. It's now asking its parent company, Bangkok-based Central Group, for more cash. That's to meet its debt payments and to make up for the financial struggles of its other owner, Signa Prime Selection, which filed for insolvency on Thursday. Signa, an alliance of property holdings across several continents with department stores in Germany, Austria, Switzerland. It even owns a piece of New York City's famous Chrysler Building. A spokesman for Selfridges says nothing changes for its customers or shareholders. Selfridge shares trade independently of Central Group and Signa. Tom Busby, Bloomberg Radio.
On the jobs front, initial applications for U.S. unemployment benefits ticked up in the week leading up to Christmas. First-time claims rising 12,000 to 218,000 in that week ending December 23rd. That's still at a level consistent with the resilient labor market. Here's Laura Rame, chief U.S. economist at FS Investments.
While there are concerns about, the labor market renormalizing, or people are starting to talk about cracks in the labor market, when I look at this indicator, I see companies still really eager to hold on to workers.
First-time claims figures tend to be quite volatile around the holidays. The four-week moving average, which offers a clearer picture of the trend, was little changed at 212,000 last week. That's the lowest figure since late October. China has vowed to step up existing monetary policy and stimulate consumer prices. Bloomberg's Bonnie Au with the story from Hong Kong.
The People's Bank of China has reaffirmed the bank's pledge to push consumer prices higher. The central bank said it will implement the policy in a targeted manner. China's recent consumer prices and producer costs fell more than expected and deeper into negative territory. That added to fears of deflation. The central bank also promised to guide what it calls a reasonable growth of credit. It also vowed to increase support for tech, infrastructure, and other sectors. In Hong Kong, I'm Bonnie Au, Bloomberg Radio.
Now it's time for global news. Let's get right over to Ed Baxter. He is tracking this story, the U.S. sanctioning some Middle East networks that are financing Houthi shipping attacks. Ed.
Yeah, thank you. You guys were talking about the number of, Brian, you at the top, about the number of ships that are staying out of the Red Sea now. Now, the U.S. has decided to fight back this way. Sanctions come from the U.S. Treasury, designates one individual and three entities of facilitating the flow of Iranian financial assistance to the Houthis on exchange houses in Yemen and Turkey. The U.S. says it hopes it will send a message and that it's serious in cutting funds to the Houthis, and we'll have more on that, as I say, in just a couple of minutes. Second American hostage in Gaza has been declared dead. We get details now from Bloomberg's Nancy Lyons.
President Biden says he and his wife Jill are devastated to hear that American Judy Weinstein-Hagai was killed following the October 7th Hamas incursion. The president says the news cuts especially deep since her husband, Gad Hagai, is also believed to have been killed by Hamas. A spokesperson for their kibbutz says Hamas is believed to still be holding both bodies. They disappeared early on October 7th and had not been seen since. Judy Weinstein-Hagai was 70 years old and the mother of 4 and grandmother of 7. In Washington, Nancy Lyons, Bloomberg Radio.
All right, Nancy, thank you. In the aftermath of the Biden administration's announcement that it is sending another $250 million package to Ukraine, the Congress, when it gets back, will be confronted with that same issue. The founder of Pangea Policy, Terry Haynes, says Congress really wants to ask questions.
What Congress is really going to want to know is how quickly those weapons are going to come, exactly what they are, and whether there is a continued resolve in the Biden administration to actually provide those weapons in a timely manner. Because one thing that's happened is it has frequently taken months for that to occur.
Meanwhile, Ukraine's premier has sounded the alarm over the country's finances, requesting an emergency meeting with international donors as Kyiv confronts, as he says, exceptionally high uncertainty over its budget at the start of the year. U.S. and Philippine top diplomats have discussed important opportunities to further strengthen their long-standing alliance next year. U.S. Secretary of State Antony Blinken and Foreign Secretary Enrique Manalo held a call pledging steadfast commitments. Last week, Manalo also talked with China's Foreign Minister Wang Yi and warned of serious difficulties in their relationship. Republican presidential candidate Nikki Haley is doing some damage control today after failing to mention slavery as a cause of the Civil War when quizzed at a forum in New Hampshire last night. This morning she appeared on the radio program The Pulse in New Hampshire and addressed what some are calling a major gaffe.
Of course the Civil War was about slavery. We know that. That's the easy part of it. What I was saying was, what does it mean to us today? What it means to us today is about freedom. That's what that was all about.
Haley says Democratic operatives were sent to ask questions. Ron DeSantis posted her video and the word yikes, and President Biden did the same with a quote, "It was about slavery." Global news 24 hours a day and whenever you want it with Bloomberg News Now. In San Francisco, I'm Ed Baxter, and this is Bloomberg.
Let's welcome our guest in, Zachary Hill, head of portfolio management at Horizon Investments. Zachary, thanks very much for taking out the time to be with us. So the S&P 500 is right on the cusp of a new all-time high. So I guess the way you look at that might dictate what you think will happen going forward. Do you see a break above that as something positive and bullish, or would it be a good time to sell?
Yeah, Brian, thanks for having me. We closed today less than 1% from all-time highs in both the S&P 500 and the NASDAQ 100. So, certainly I think that's something that's very much in the cards, over the next few days, maybe not tomorrow, maybe the first week of the year tends to be a good time, seasonally for equity markets. And we do think this rally is on pretty firm footing. We've had a major kind of policy headwinds that are now going to be turning to tailwinds in a material way. We've got continued strength in the economy, and especially with the tech and communication services parts of the market, there's really, really strong earnings. And so, putting all that together, I'm not sure, what people are complaining about when they look forward to 2024.
Well, I think a lot of people just think so much is already baked in. So, what do you do from here? You can wait on the data, and that's fine, because if the earnings get stronger, if the economy even picks up some steam, then that would be good. But some people want to get out in front of that. Are you thinking that that's possible?
Well, I mean, the last 3 years have kind of shown that anything is possible, and I do think, this, as we look forward, we do need to be humble about kind of the way the economy is going to evolve, because there are a lot of people that are trained on traditional business cycles, and this cycle has looked nothing like that whatsoever. A lot of different reasons for that, stimulus, the quantity of that, wealth effect, demographics, just a whole host of things that have kind of confounded typical macroeconomic analysis. And so we do have to be humble as we look forward. But kind of as we see it, I think 2024 is going to be about a year of kind of getting away from cash and cash-like instruments where people have been sheltering in a really material way, and getting back reinvested in portfolios that can really drive long-term financial results.
So you're not all that positive about the bond market?
I mean, if I had to rank them, I would say, stocks over bonds over cash next year. Bonds are definitely, much more attractive. And I think one important thing to think about that we haven't had over the last 2 years is, the Fed has got space now. If we do hit a growth hiccup, which we don't see coming, but if we do hit one, plenty of exogenous things can cause that. If we do hit a growth hiccup, the Fed can cut, and they can cut materially. Typically in a recession, the Fed cuts 400 or 500 basis points. Well, they have that room to do that now. That wasn't the case for the last 2 years. And so, from a probability weighted perspective, that is something that definitely has to weigh in on the, investors' calculus. And I think that's why, the curve is so inverted and the market is expecting a good amount of cuts next year.
For a big part of this year, it was really mean reversion that seemed to be working because you still had the Fed raising interest rates, and there were a lot of fears around about where the economy would eventually go because of the lagged effect. But because stocks were so bad last year, they became so good this year. I mean, that's not the only reason, but, it's one of the things that does often happen in markets. And I'm just noticing now that in Asia, you're starting to get a little bit of a fire under Hong Kong and China. Now, we've seen it before, and it has often turned out to be a false dawn. Are you looking at China? And do you think that some money may take a punt there on the sort of dogs of the Dow theory?
Yeah, I mean, that's definitely been the case. We've seen some pretty whippy trends, within global equities under the hood. And definitely China has been one that has confounded investors. I do think, when we saw a pretty substantial rally today, I do think the bar is higher than it has been, for Chinese stocks. Put simply, there's just not a lot of trust that, the administration is going to put forward policies that support growth and support equity holders.
There's also the notion. I didn't mention it directly, but places like Southeast Asia actually stumbled a bit this year, mainly because the Chinese economy stumbled. So if you're right, if you get reasonable policies for growth, but maybe not that market friendly, could Southeast Asia maybe get a bid?
Yeah, I think, Brian, that's a great point. And it's definitely the case as we think about, emerging market exposure more broadly. It used to be the case, over the last really 10, 15 years, if you get China right, you get all of EM right. That was generally the story. The economies were very intertwined, in terms of supply chain and the like. And, it really hasn't been that way for the last few years. And so I do think that that's going to be a continued theme in markets as people look, not just at the kind of the broad overall index levels, but start to look for individual stories where, policies, growth, all kind of line up in a way that people can get behind that. And, as we look at China right now, I don't see, those that kind of mosaic of supportive factors lining up right now.
It's crazy. I mean, reporting on this every day as we do and talking to 12 guests, you get examples every day of the same old Communist Party. And then you also get examples of how the tone has changed. So perhaps we get a clearer picture next year. We only have time for one more. I think I'll give you a big open platform question. What's your number one call at the moment?
Number one call is, stocks higher next year. Do not fall in love with your cash allocations. Those 5.5% rates that people are clipping right now are going to look pretty silly if we, maybe not as high as we've done this year, but put in a good equity market next year.
Yeah. All right. Thanks very much, Zachary. Zachary Hill, head of portfolio management at Horizon Investments. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, SiriusXM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis. Join us again tomorrow for all the news you need to start your day, right here on Bloomberg Daybreak Asia.